Hello everyone, Eric here with this week's Stock Market Companion video update. This week we want to share with you something very exciting. How to make money stock investing while reducing risks. We want to share with you 3 steps for investing successfully in a turnaround story. Let's get started. For our example today, we're going to use Ford Motor Company. Stock Market Companion subscribers of our 15-minute stocks market update know that we made a 94% return on Ford Motor Company this last year. For compliance purposes, we need to say that past performance is no guarantee of future results. Now on to step 1. Step 1 is keep a lookout for when companies hire new leaders. In the case of Ford Motor Company, Ford hired Alan Mulally in September of 2006. When that took place, we were all over it and we put Ford Motor Company in our watch list. On the screen here we have a chart of Ford Motor Company. It's ranging back here to 2002 all the way up now through to March 2011. What we see here is in 2006 when Ford hired Alan Mulally. We then had a long lateral consolidation where the price really didn't get anywhere, and then we had the financial crisis bringing the automotive industry down. We don't know at this point in time what's going to happen with Ford Motor Company. We stayed away. We then have a very strong recovery, and then here in the November timeframe of 2009, Ford Motor Company came out with earnings. That brings us to step number 2. Watch for when the company's quarterly earnings materially improve. In the case of Ford Motor Company, that occurred in November of 2009, and it was at that point that we purchased our first shares. That takes us to step number 3. We purchase our shares on a significant breakout above previous highs. Let's look at the Ford Motor Company chart. In the case of Ford, we have here the November time frame, and we see here this previous high area right in the $8 range. For us at the Stock Market Companion, you can see how this high goes back through to 2008 and corresponds to the higher end of this lateral consolidation in the second half of 2006 and all through 2007. When we came close to that line and the volume is increasing significantly, that was our buy point. In the case of Ford Motor Company, at the Stock Market Companion, we bought on a breakout above $8 a share. At that point for us, the rest was history. We were on board with the stock and participating in this strong upswing in the stock price appreciating very strongly up through the January of 2010, at which point the overall market started to fade, and we knew that we were in for a pullback for the overall market. The market had recovered from the 2009 bottom. We were attentive to a pullback in the market. We exited our Ford shares on a very strong initial return here, let the market settle down, and then we re-entered our Ford shares and ran it again this next leg. Our cumulative return was 94%. Again, past performance is no guarantee of future results, but this is what we look for in a turnaround story, and we reduce our risks by waiting for that breakout above previous resistance. That takes us to our tip of the week. Our tip of the week is follow steps 1, 2, and 3 to successfully participate in a turnaround story and reduce your risks. Step 1, keep an eye out for when companies hire new leaders. Step number 2, look for when the quarterly earnings, materially improve. And step number 3, wait for a breakout above significant previous highs. That wraps up our video update for this week. We hope that we've shared with you some things that will help you in your investing for years to come. You can find more information at our website, stockmarketcompanion.com. There you can also try our free trial. See you next time.